Quantacast 6. We're back refreshed after our holidays and our New Year's. Stacey, what did you get up to? Let's start off by asking you what you got up to for your New Year's break.
So with my family, we spent the majority of the time at our farm. We've got a beef cattle property in the Brisbane Valley. So Christmas Day, we had just under 50 friends and family come out there.
You love a large group out there for Christmas?
We
Always
do. Glutton for punishment, I suppose, in terms of the work, but it's great to have everyone in the one place. The kids have a fantastic time. And then we're at Cotton Tree for a bit of that. My mother-in-law has a caravan site up there that we go up to and, fantastic spot. Kids love it. So it was a relaxed, refreshing time. As you said, it was good way to start the year. Good. And Chris, what about you? You had an extra week off with your kind of area of the business. It shuts down really for about a month.
Well, it's really quiet over mid-December through to mid to late January. So, I took 3 weeks off and had a bit of time at Fraser Island and a bit of time down the Gold Coast. So, typical Australian
summer break.
Summer holidays, So, it went well.
Good, I did the same. I just spent a couple of weeks with the kids down at the coast, which is really refreshing. And, it was a big year last year, so we're looking forward to another big year this year. And 6 episodes, or now into our 6th episode of the Quantacast, so we should be, I think, hopeful and happy that that's all gone well. I think we've had our most views on the most recent Quantacast 5. And perhaps that was because we had a corporate international tax expert in Chris Ball from BDO on, and he delivered some really great information, didn't he, Chris?
Yeah, look, that was really interesting. There was a few. The thing that particularly resonated with me was Chris's suggested strategy about how to take tax-deferred income in your accumulation phase and how to take capital gains in your retirement phase, which sounded really sensible to me in terms of a smart tax strategy. If anyone hasn't seen it, Quantacast episode 5 is on our website and worth a look.
Absolutely. So I guess today we wanted to get together and maybe provide an update to our investors on what the upcoming year looks like, but probably more the first quarter of the year. We've had quite a number of conversations over the last, since we've been back, with our investors about an appetite for some more opportunity. And as I said earlier, when you have a bit of a close down in that first month, things this year seem to be a bit slower getting moving, and that may be due to some of the economic environments that we live in at the moment. But Chris, what's the team looking at the moment, and what's your outlook on what we might sink our teeth into in the first sort of 3 to 6 months of this year?
Yeah, so it's early in the year, and the opportunities and the deal flow doesn't really ramp up until we're noticing a very noticeable difference over the last couple of weeks, and this is being recorded sort of early to mid-February. So that's when owners or vendors are really engaging with agents. Agents are in turn engaging with us about opportunities. We're seeing the consistent theme that we're seeing from agents is there's a lot more off-market than there is on-market at the moment, and the real task for both ourselves and agents is working out who is realistic about what the current interest rate environment has done to pricing and the uncertainty in debt and equity markets, and what that is about the risk that you've got to price into assets. There are some people who are still hanging on to book values from 2021, early 22, and but on the whole, I think vendors are. Everyone knows what's happening with capital values at the moment, and that'll endure for some time. The next 2 or 3 years, we would expect before we see people coming back to those book values that they probably saw in 2021, early 22.
So, Chris, another question I have is what do you see as the drivers of more assets coming to the market, even when prices may be off at the moment?
Yeah, people realise that in the main that they won't be achieving the the valuations of 2021, and they'll be somewhat discounted from those prices. There's probably three reasons why an asset would come to market. Either people want to recycle capital, so they've got something better to spend money on, and that might be
in the same market.
Correct.
Yep.
Correct. Secondly, it may be a fund-related issue. For example, if it's a closed-ended fund and investors want them are entitled to their money back, the fund needs to be wound up and then they sell. So that's either closed-ended funds or redemption requests for open-ended funds. Or thirdly, there's potential for bank pressure as people who are prior to values declining at the limit of their interest cover ratio or their loan to value ratio, as capital values come down and interest rate costs come up, there's a lot of pressure on those two key metrics for debt facilities. And there is some patience with banks, but as I say, we haven't seen a lot of people coming to market forced by banks at this stage, but that may be another factor later in the year.
Chris, can we be a little bit more specific now? Because I know you guys have formed a view, which is what we need you to do. So what is it that you're honing in on? What are you really trying to? Where do you think the really strong opportunities are?
So things that we're focusing on are assets that provide a really strong distribution with a very compelling value upside case. So that's currently at the moment most readily found in office and retail assets. We're looking at those assets in very strong markets where there's a deep tenant pool and leasing fundamentals are strong. So without speaking about individual specific opportunities that we're reviewing, they range from properties from 30 million to 120 million.
And on that, 157 is, whilst we talk about it a lot because it's something we're quite proud of, it's really tracking along nicely, and a similar project of that nature would be something you'd be pretty keen to get into, and I think our investors would be too.
Yeah, I think 157 has been a great example of the types of investments we're looking for, where there's a really strong underlying distribution and a very clear capital upside case. So we've outperformed our acquisition assumptions on that one. So our leasing is ahead of schedule. We're spending less capital than we had intended, and so we think that's going to be a really good investment. It's a single asset closed-ended fund, which is our current preference, and from the investor survey that Dave is going to talk about later, seems to be the preference of our investors as well. But look, the plan is that that's a medium-term hold. Once we complete the leasing, which hopefully by the time this podcast goes to air, we will have taken that asset from 48% occupied to 100% occupied. We're currently, at the time of recording, 98% committed. But look, then all that will be left for us to do is sell it at the right time and return a profit for investors. Assuming everything works as per our forecast.
Yeah, I think that's really well said. The team's working well. Well, that might lead me into doing two things. One, thanking Chris for his time today, because we're about to. So thanks, Chris, for being with us again.
Chris.
And secondly, we might invite Dave Carpenter to join us so he can run us through some of the survey results that we sent. The survey went out late last year. So look forward to having a chat with Dave in a minute. Well, our next special guest, he's not that special, is he? He's with us anyway. He's with us every day, unfortunately. Just kidding. Dave, welcome to Quantacast 6.
Thank you very much.
It's great to have you here.
Nice to know I'm so welcome.
Yep, and loved, of course, by everybody here at Quanta. Dave, you sent out a survey. It was December last year. I think, was it December?
Correct.
And you had a fantastic response from the investor pool. And I think around 170-ish investors. I won't steal your thunder, but we thought we'd get you on today just to run through some of the responses and some of the sentiment coming from the investors. And I know, Stacey, you've spoken to a lot of investors to kick the year off. So I'll hand over to Dave, and maybe the two of you can talk through some of the information you've come across.
Of course. We just want to say a really big thank you to all our investors that took the time to respond via our feedback survey. It's going to be the first annual survey, so we'll continue that on because the response has been so good. Just shy of 200, as you said, Tim, which equates to just over 20% of our database. And the research that we've looked at shows that for email responses, around 6%. It's a good response rate, so we're very, very happy with that.
You should
some
be.
really, really good insights and comments from investors.
It feels like we've got a really engaged investor database at the moment, Dave. And I know you're going to talk to this stat. There was one stat there around how much we're communicating and whether people thought it was, I think, at the right amount, not too much, not too. What
Yeah, absolutely. So
one?
One of the questions was how are we communicating with investors, and the scale 1 to 5, enough, not enough, but essentially speaking, 75% of investors said that we're communicating just right, which is great to hear. As the Quanta brand has moved forward, we've done Quantacast, for example, quarterly reporting, poignant newsletters or updates whenever they're relevant for specific trusts. We've been on the phones a lot to investors. The roadshows we've been on all over the country, or certainly a lot of Sydney, Melbourne, Eastern Seaboard.
Yeah.
So it's been really well received. So it's good to see that all these little touch points with investors have been really well received. It's really good to hear.
Dave, before we get into specific stats, or I think that's what you'll provide us, or the sentiments, Stacey, there's been a few things that have kicked off the year for us, in different ways. And so what's your view of how the investors are looking at the upcoming year?
I think one thing just to tie back to the comments that Dave's already made and further comments he will make is I was really pleasantly surprised with the 75% response on our communication, because there are some funds that we manage where we aren't in full control of certain decisions as to what we can and can't communicate. So we do have some investors who are receiving varying levels of communication from us. So with those things in mind, to hear that we've got 75% that are happy with the level of what we're communicating was really rewarding. We've put a lot of work into that.
We have, yep.
Across a various range of communications. So very pleased to see that we're on the right track, and I think investors will also find it rewarding, and I think that ties back to why we had such a good response rate, is because they feel they're being listened to. So, their response wasn't a waste of time. They feel as though it was worthwhile in answering it openly and honestly, so that we would receive it and we can action it. And it wasn't all roses. There are some constructive comments in there which are fantastic, because if we don't hear these things, we can't make changes. There are some things that are outside of our control we can't action, but where we can, we absolutely will. So we really appreciate the feedback. As you've mentioned, we've been on the phones a lot, last year and the start of this year, and the support's been really overwhelming. We've got investors who are continually communicating that they're ready for the next one. When is it? They're happy with what they're seeing from us. They like the engagement, and they're raring to go.
There was an email communication that went out to the investors on a matter earlier in the year, and we got on the phone just to follow that communication up. I think we spoke to about 240 or 250 individual investors, and it was really pleasing. The sentiment was great. There was some honesty in there as well, which we always need to make sure we're improving. Dave, what else stood out in the survey for you?
Yeah, there were a couple of standout questions for us. I'll just run through them now. But the first one, which real estate sectors do you favour? Now, with this one, there's no real surprises there, and Chris has already spoken to a little bit of that. But commercial, office and industrial were by far the preference from our investors. And that sort of came through in a lot of the discussions we'd already had with investors. So it's good to see that the conversations we're having are ultimately, reflected in, these survey questions as well. Third and fourth, respectively, were retail and development. So again, value add items that we're looking at as well. So it's good to know that we're following the investors with the things we're looking at. As Chris mentioned earlier, office commercial is what we're looking at the moment. Again, if we can replicate something like Ann Street, where we can improve occupancy and provide a great value-add environment and story for investors, that's fantastic.
I think there's also a development opportunity without going to the specifics that Chris is looking at. It's probably worth noting for our investors that whatever makes sense from a good investment, we keep it in the field generally of course commercial property. We'll put to them, I think, see what
absolutely.
they think. I know there's one that Chris is having a look at that's quite a good development story. Sorry, Dave, to interrupt.
So moving on, and this one we've spoken about a few times through the Quantacast and different channels with investors, but preferred trust structure. Now, this is one, of course, where we feel we've got some really good sentiment from investors and acted on it already through Ann Street and Launceston, which is closed-ended funds versus open-ended funds. Now, again, the sentiment seems to be from investors that closed-ended funds are the preference at this point in time.
So what sort of stat there, Dave?
Yeah, so 62% were opting for closed-ended trusts through the survey, with only 12 as a preference for open-ended. So there were an element of investors there that were quite happy with either.
Sure.
But ultimately, that tells us that we're looking
on the right track
at the right trust structure. And I think the closed-ended structure, of course, provides a little bit more certainty around exit, and it provides investors a little bit.
I think as well with the closed-ended, investors sometimes just want to know that's the asset and that's all I need to worry about. I looked at that particular property itself and I put my money into that property, so whatever it does, whenever it sells, whatever new lease deals are done, it's not too much wider than that. It's just that's the one.
The open-ended trusts certainly have their benefits, of course, but you know exactly what you've invested in with the closed-ended.
Yeah.
With open-ended, you can have multiple assets, multiple tenants, and you can choose to enter at certain individual points, but you may not want to invest in all those assets if they were single assets. So that's one
good
of the
point.
differences.
Good point. What else did you discover, mate?
Is external research important?
Okay.
So it's 56% of investors said yes, it was important to us. So we've had a look at different avenues in terms of research. It's about giving investors sort of another trust signal, so to speak, with their investments. Not just taking our word for it. If we are able to find cost-effective solutions to provide an additional third-party reference, or recommendation for our investments, that's only going to help with investors' sort of decision-making. So, we're continue to look into that based on the feedback we've received there as well.
Another thing with research too is time, because sometimes, particularly where you're wanting to get a seal of approval, there are some companies that will review your IM and they'll certify it as meeting certain standards. That takes a lot of time, and we often don't have that time. By the time we sign a heads of agreement and we're into due diligence and start fundraising, we need to be out with an IM and start raising quite quickly. So we can't always go through the processes necessary to do that, but we absolutely have other avenues open where we can include external research, so that's definitely something we'll look to implement. And where we do have a longer raise period, we can certainly look to get those external certifications as well.
Great, more good feedback.
Yep, the next one, would you be interested in information sessions? Now, this is something we've thought about quite long and hard, and we've already started the process through the Quantacast, essentially. Yep. We had Chris Ball on, as we spoke about earlier, from BDO. So we're going to take this further forward as, and have a Quantacast professional series, meaning that we're going to invite professionals from external companies in a range of different elements that will come on here and provide some additional information that may be of benefit for investors in all walks of their investments.
Yeah, and I think that's an important comment, Dave, is that we have such a wide investor base that their backgrounds are so varied that they're not necessarily experts. They've clearly done very well for themselves, very astute people in their own rights, but aren't necessarily experts in every area. So if we can offer that extra information that helps them to either understand certain parts of a transaction or a fund or the investment generally, fantastic. And as always, we're happy to answer specific questions, but it just helps investors broaden their knowledge base as well.
Dave, that's terrific feedback, and we should be really proud of what we've been able to achieve over the last year, or since, as you said, coming into the turn of the first year under our Quanta brand. I understand you ran an overall feedback or overall performance scale from 1 to 5 for the investors. They could vote 1 being the least and 5 being the happiest with how we're overall performing. And upwards of 80% were sort of in that 4 or 5 category, which is great. Stacey, we can't fix everything immediately, so what's left for us to do you think?
Yeah, so as I mentioned before, there are some situations where we're not able to implement all the changes that we would like, and so to receive 80% 4 or 5 star rating in light of that is fantastic. I was actually really pleasantly surprised by that number. In the 20%, there's definitely some feedback in there that we're either partway through implementing and other things that we've already met to discuss how we can implement those changes. Some of the things are outside of our control and we can't address, and that's always going to be the case, but to the extent we can, we absolutely will.
Great, thanks Stacey for that insight. Dave, so what happens now with these survey results? I understand you're going to release them to the investors or give them a look at that?
Yeah, absolutely. We'll have a communication out to our entire database just to provide a little bit of an overview of all the questions that we haven't been able to cover today, so that everyone can have a little bit of read for themselves, and we encourage investors and everyone out there to contact us if they have any further questions.
Fantastic. Well, that might do us for the Quantacast number 6. So, Dave, thanks for being here once again. Always handle yourself beautifully. Stacey, great to see you again here on the Quantacast, and we look forward to Quantacast 7 and to keep an eye out for our first Quantacast professional series, which should be out very shortly as well.